What's going on? Welcome back to Financial Journey. So today we're going to talk to you about SoFi. I want to go over some of the current data points, what shorts did, which was very surprising of them to do, as well as just briefly go over the recent interview done by Anthony. So I'm going to go over all the things that you need to know, but first make sure you guys hit that thumbs up, and with that, let's get right to it. Starting off, SoFi does deserve a round of applause. So it did go up 2.98% today, a lot of volume, so 37.2 million shares being traded. 30.8 is the average. A lot of institutions paying attention to SoFi. That's largely linked with what Powell mentioned today, kind of as far as a soft landing, and just generally the broader market's optimism. So that definitely allured a lot of big buying. So 5.65 million, 1.1, 1.6. Even aside from that though, algorithmic trading did make up a lot of the volume as well, clearly just piggybacking off of the broader market's optimism. So all in all, pretty exciting day. Even though the intraday doesn't really look like it, there was quite a big battle that did happen today. So once I go over shorts, that'll make a little bit more sense. But there was no actual news, no SEC filings associated to SoFi today. There was this interview that did come out. So I'm going to play this near the tail end of the video, just in case you guys haven't kind of listened to it. I really do like a lot of the key points that Anthony did bring up about obviously interest rates as well. He did get asked about kind of SoFi's stock performance. He said that he's very disappointed based on that. And I think that's literally the best thing. As I've been saying over the last several videos, that SoFi, it's very discouraging, the fact that the price action hasn't necessarily been the best, and this is why there is a difference between a broken company and a broken stock. So right now, SoFi is a broken stock based on the price action. The fundamental business is not. And that's kind of the Cole's notes, what he did say. Of course, he says that in a little bit better of a fashion and all that, so stay tuned for that. But when it comes down to today, like I said, there was a battle, and that is because shorts were really trying to suppress SoFi. So it did have a high of $6.62. So once I go over the technicals, that'll make a little bit more sense on why it did bounce off that general area. But in essence, 7.87 million shares were increased. So shorts were definitely on their game today. 18.67% of the free float is being shorted. 193.82 million shares overall are being shorted. Cost to borrow average is 1%. You do see some signs of manipulation once again. So it is kind of a bold statement to make, but I feel like whatever broker out there is clearly a market maker, and they're kind of working alongside shorts, because every time shorts do really double down, you kind of see the cost to borrow minimum. So in case you guys do not know, cost to borrow minimum means there is a broker out there physically paying people to short SoFi. Kind of messed up, but beside the point, utilization 65.46, and then short score, so the higher the number, higher the likelihood of a squeeze happening, is 74.14. So shorts doubling down. I don't know, maybe they are aware of CPI data coming out early or something along those lines. If CPI does come in lower, shorts are about to get fucked. Pardon my French, and the children around and all the other fun stuff. But yeah, definitely, I don't know. Shorts put themselves in a very, very sticky position. It would have been nice for Anthony to bring up shorts during his interview. He kind of talked on how that he's getting, that there's a lot of downward pressure. He just said it very, very loosely, that there's a lot of downward pressure associated to risks, again, linked to lending and stuff like that. But it would have been really good if he just said, you know what, like shorts or blah, blah, blah. I don't know. I guess this wasn't really the right context for him to really say that. This was more official, if that kind of makes sense. But aside from all of that fun jazz, looking at options, 5.71 million in calls, 2.1 in puts. So a lot of dollar value getting into SoFi through options today. 40% of all the options being done today were optimistic. Of course, some of that probably is shorts hedging just in case. But beside the point, looking right here, you do see a consensus for it to be above 650 to 7 for the end of this week. So that is exactly what the Elliott wave technicals are saying. So pardon my kind of that trippiness there, but you do see the Elliott wave technicals having a pivot point of $6.17. So for as long as SoFi is above that, then it is anticipated to get to that 712 to 730 range. So I don't know, based on the options, it is anticipating for this to come to fruition. So if you think so, then definitely have at it. No new analyst ratings today, so same two crappy ones that came out yesterday that really caused it to go down, which is unfortunate, but hopefully there is a lot more that do come out, encumbering what Powell recently said and possibly Anthony's recent interview. So hopefully that'll come out sooner rather than later. Aside from all of that fun jazz, I'll give you an overview of what the open interest is currently saying. So right now, with us at $6.57 and change, there's 37,000 at that 650 strike price. So right now that is in the money. So if SoFi is able to close above 650, then this is where you'll see come Monday, as of right now, market makers buying about 3.4 million shares on the open market. So most likely that'll increase a little bit more. So you should see a little bit of a battle once again at 650, but hopefully with CPI very, very positive, you'll just see bye-bye to the 650s and hello to the 7s maybe. At the $7 strike price, there's 25,000 in open interest. So again, just to kind of keep that in mind, as of right now with it at $6.58 after hours, it is trading between these 2 points, so this S1 and the pivot. So 628 is that very strong support, and today it wasn't even touched, so that's generally a good thing. It did get a low today of $6.32, which is kind of crazy, so give yourself a shout out if you did buy that dip, or if you got anywhere remotely close to that, or even better yet, yesterday when it hit that 615. But $6.75 is that next strong support / resistance. On the actual chart itself, it is transitioning into the higher percentile of the Bollinger Band. Stochastic, you do see a nice bullish deviation, plus it is at 45, so somewhat considered neutral, so not really overbought nor oversold. So again, something to kind of consider. And number of retail investors have been buying the SoFi dip. So again, if you are part of those, this group right here, give yourself a shout out in the comments below. So all in all, that's kind of a quick summary of what happened with SoFi. So like I said, shorts doubling down today. They either know something that the rest of the market doesn't, or they're about to feel a lot of pain, especially with CPI coming out tomorrow. So like I mentioned, I'm just going to quickly play this. So for those of you that have already watched it, then you guys can tune out now. Appreciate all of you guys watching. Don't forget to hit that thumbs up. And with all that, I appreciate all of you guys watching.
That's right. I'm joined now by Anthony Noto, the CEO of SoFi. Thanks so much for joining us here. Before we talk about your business, I want to talk more big picture about the conversation here in Sun Valley, specifically about the state of the economy, given your purview through your business, as well as the conversations you've been having with other CEOs. What's your sense of the economy right now?
Yeah, I'd say the conversation really kind of pivots around 2 points. One is where's the consumer, how are they performing from a credit standpoint, and where are interest rates going in the economy. On the interest rate point, we came out of Q1 having reported 26% year-over-year revenue growth with really no growth in our lending business, which is a really strong quarter, and we're really pleased with how things have gone since then. We've came out of that quarter thinking there'd be 1 to 2 rate cuts and positioned our business to do that, which would give us still attractive revenue growth, maintaining profitability, but just as importantly, having a strong balance sheet to take advantage of when rates go down. I think the consensus view is starting to come into picture, and people believe we'll continue to get the data points on inflation, continue to see an uptick in unemployment, but not too bad, and we'll have 1 to 2 rate cuts by the end of the year, which would be really positive. As it relates to the consumer, we've seen really good trends in spending. We've seen really strong demand for refinancing personal loans as people are trying to lower their debt so they can make sure they're planning for the future. So overall, our company's performed really well in this environment. I'm glad we took the stance of lower rate cuts than everyone else, because it's positioned us now to benefit when rates start to come down. So I like how we're positioned. And for the first time, I'd say in 2 years, there's a more central consensus view about rates, and we're...
And one thing I just wanted to mention, though, is so for any CEO to do an interview in between a end of a quarter and their earnings, you have to be confident about your numbers. Like, you can't, this will make Anthony look like a fool if come Q2 earnings, they come out to be crap. So this in reality can also be seen as extremely optimistic based on that standpoint.
Credit is, and credit actually has performed relatively well throughout the year, and that's something I heard from a couple CEOs last night, and we're really happy with where it's performed as well, in line with our tolerance levels and our expectations. So all in all, I think we're setting up for a pretty strong back half of the year in 2025. If we get the right fiscal policy.
Well, we're going to talk more about fiscal policy in a minute, but I just want to return to something you said. I know you've been introducing new things such as alternative investments, but also you mentioned you're not doing as many student loans. What is behind that policy, and where are you shifting your focus to effectively follow or lead consumers and where you want to be growing the business?
Sure. As we came into 2024, there was a view that actually rates would be cut 4 or 5 times, and we believed that for rates to be cut that frequently, there would have to be a recession or some type of underlying problem. It turns out we'll get 1 to 2 rate cuts, which is where we've been positioned. And as we thought about the environment and thought about how much we invested in our financial services business, our SoFi Money product, our SoFi Invest product, our credit card product, as well as our technology platform, we had an opportunity to drive really strong growth there at 50% and really pull back in the lending business to be more conservative, to wait to see where the economy shakes out, where interest rates shake out. And now we're coming into a picture where that's a lot clearer. So we've delivered really strong growth without really using the lending business to help drive it. And now we're in a position where, as we go into 2025, to use both.
Now, of course, your business all started with student loans. And then just last week, a federal appeals court allowed a key part of Biden's student loan repayment plan to resume, staying in an order that had temporarily blocked it. Now, there's been a lot of back and forth on this. But how does Biden's efforts to repay student loans impact your business? And how do you see some of these legal changes and sort of the whole appeals process and the outcomes impacting your business going forward?
Yeah, we've really focused on people that have private student loans. Those are people that are still managing their cost and giving them cost savings on refinancing their private student loans, and that's been a smart strategy. It's a much smaller percent of our business. We gave guidance that we'll do close to $2.5 billion of revenue this year. We'll see really strong growth from the other businesses, so we're much less dependent on it. The fact that we grew 26% year over year in Q1 with no growth in lending overall is a great indication that we've invested in other areas that are really paying off for us. And the response that we're seeing for consumers in our SoFi Money product with 4.6% interest rate, SoFi Invest product, as you mentioned, offering them alternative assets and now IPOs, we've seen a great response there, and it's allowed us to go after other growth areas and not be so vulnerable to the whims of where the political winds are blowing as it relates to student loans. I will say this, we've done well with a high rate environment and uncertainty around credit. I'm really excited about what will happen when rates start to come down, and you can start to see the light at the end of the tunnel. When rates come down, we'll see a real pickup in student loan refinancing. Right now, there are people with rates at 7 to 8% student loans, but we only can offer them in the 6s. As rates come down, we can start to offer them in the low 5s and maybe in high 4s. So that business will pick up. Our home loan business had historically been a refinancing business. We've invested a lot in being able to do purchase home loans, and we're now seeing that pick up and gaining market share there. And we've recently made the decision on home equity lines to give people even lower cost of debt. So as rates come down, we'll see a real pickup, and as long as the economy is stable and inflation is stable.
So you've mentioned various ways that your business is growing, but your stock is way down. Stock is down about 35% year to date, down about 19% since your last earnings report. I know that you have earnings coming up in a few weeks, so you're limited in terms of how many specifics you can share. But what's your message to investors? Why should they hold on when the stock is down so dramatically?
Yeah. The thing that we can control is our strategy and our execution. And for the last 7.5 years, our strategy has been consistent and our execution has been consistent. We've driven good, steady growth. When I joined the company, we had less than $300 million of revenue in 2018. Now we're over $2 billion of revenue. We weren't generating profits. We weren't generating positive EBITDA. Now we're generating both positive EBITDA and GAAP profitability. So I'm really pleased with what we're doing. In terms of the stock, I'm equally disappointed. I'm a big investor. Our employees are large investors. What we've seen and what we believe is happening is that the group of fintech companies that have credit exposure has been really hit hard. And they've been hit hard because of the uncertainty around interest rates. When will interest rates peak? And when will credit peak? And as I mentioned, we're really pleased with where credit's performed. We expected it to pick up a little bit, but it's within our tolerance levels. So good sign there. And as I mentioned, 1 to 2 rate cuts would be welcomed and moving in the right direction.
And what about AI? Will SoFi be the one to bring AI to retail banking, and will that really accelerate your results?
Yeah, there's a whole spectrum of technologies that we use every day to ensure that our product is safe, it's reliable, and we can be a trusted partner. Where we want to use AI is to fortify those areas, but we also want to use it to answer 3 questions every day. Because this is a financial show and we operate in a financial world, people want to talk about interest rates and consumer spending. We don't spend a ton of time talking about the product. but we are a product company, and my vision for the product is that you open up SoFi every day and you go to your member home feed, just like you would to your Twitter home feed or your Facebook home feed or LinkedIn home feed. But we answer 3 questions for you in a personalized way. What must you do in your financial life that day? What should you do, and what can you do? AI allows us to take all the data about you and everyone else and answer those 3 questions.
Just a final question about politics, because I know the conversation about the presidential election is front and center here in Sun Valley. What outcome do you think would be best for the economy and for your business in particular?
Well, you know, I'll make an analogy. I went to West Point and I played football, and I want Navy to win 364 days of the year. But on that one day when they play Army, I want Army to win. And so I'd be lying to you and being, less than disingenuous if I didn't say our business would benefit from a Republican administration. There's more capital markets activity. There's more M&A activity. I want our country to be very strong and vibrant. And on one particular day, I'll be rooting for one particular party.
So yeah, there you have it. Let me know your thoughts. Don't forget to hit that thumbs up, and I appreciate all of you guys watching.